Okay, hi people. So what we will do today, in the next part is we will talk about lease or buy. Okay, so what is lease or buy decision? What do we cover today? Will be entirely on the lease or buy decision, and then subsequent to that, what we will do is we will also talk about um what are the components of a lease or buy decision, and after that we will do a question. So guys, just to remind you, lease or buy decision is something that is deemed difficult by students find it difficult because students believe that is something that is different. But let me ask you this question. Do you think NPV is difficult? Yes or no? If you think NPV is difficult, then you may find lease or buy a little bit difficult. But if you think NPV is doable, then you will not have a problem when it comes to dealing with lease or buy, because lease or buy effectively is the same question as what you have done in your NPV. There are only very slight, subtle differences between your lease or buy and NPV. And don't worry about how much different is it, because in the end of the day, when you do a lease or buy type question, trust me, it is something that you will be able to very, very quickly adapt to. Okay, why do I say that? The reason why I say that is because when it comes to a lease or buy question, it is something that you are very familiar with in terms of structure, in terms of the way it looks like. Okay, what may be different, or what may be a little bit of a tweak, would be the components inside the lease or buy decision. So here, when you talk about lease or buy, you need to understand what is the objective. So guys, I always tell you this: whenever you are doing a question or a part or an area, your most important task is to ensure that you understand what is it that you are doing. So for example, like this, in a lease or buy decision, you need to understand what are you doing, what is your objective. So let's start with the objective. Your objective is actually to identify whether to lease or whether to buy an asset. Okay, that means if you don't have enough capital to support long-term buying of the asset, then the next best thing that you can do is you can lease. So you also need to understand, or you also need to know, what is the difference, or what are the advantages of leasing as compared to buying. So these are the few little things that you need to know. I'm telling you guys, take it from me, it's not difficult. Okay, it's actually quite simple and straightforward. The only thing that you probably might find as a little bit of a difficulty is maybe just understanding certain concepts. Okay, so let's talk about lease or buy. So the first thing that I want you to know, okay, is let's talk about a few concepts. So what are the concepts that we are going to talk about? Number one, you need to know what is a lease. Number two, you need to know what is a lessor. And number three, you need to know what is a lessee. Okay, so besides that, I also want you to know what are information such as what's the attraction of using a lease rather than a buy? What is an attraction of a lessee and a lessor in terms of taxation when it comes to lease or buy decision? So these are the kind of things that we need to be aware of. So guys, what is a lease? what do you know about a lease? Okay, leasing actually is a source of finance that is normally used, okay, it's commonly used by companies that find it difficult to raise long term capital. Okay, so example, if your company find it difficult to raise long term loans, then you will use a lease. So lease is an arrangement. It's an arrangement that is commonly used by a company um, by a company that finds it difficult to raise capital expenditure. Example, the company finds it difficult to raise a loan, then they will use the concept of lease or buy. All right. Now, besides that, what else you need to know? A lessor. So, what is a lessor? Who is a lessor? A lessor is the person who owns the asset, okay, and he is also the person that provided the initial finance for the asset. That means he purchased the asset, he bought the asset, he used his own capital to purchase the asset. So the owner of the asset, okay, he used the own capital, he used um, or he provided the initial finance for the asset. Rather than saying use, okay, he is the person who provided the capital for the asset. Right now, the lessee, okay, I think you guys know who a lessee is. A lessee is the person who uses the asset. That means they are holding the asset, or they are using the asset, or they have a possession of the asset, okay, but they are only using it over a specific period in which they pay rental. So you can say they have possession of the asset, use the asset to generate um, not to generate, use the asset over a specified period, okay, and this specified period is where they actually pay lease or they pay rental for the asset. So guys, these are the three major terms. Why you need to know this is because throughout this whole topic, okay, I'm going to use the term lessee, lessor, and also leasing. Now, common examples of people who are lessors. Lessors are normally insurance companies, okay, financial institutions, all right. Banks, okay, these are normally the examples of lessors. Now guys, I want you to remember, why are lessors only these people? The reason why only the financial institutions are considered as lessors is because these lessors, okay, are usually people who have a large amount of capital available, right, for the most part. Now also, you need to understand the concept that um, whenever lessors are involved, they are the people who have the ability to purchase assets of a large value. So that's why I say normally they are financial institutions, because these people are the ones who actually have the um, capital to purchase large amount of assets. The next one, um, what are assets that normally are being leased? So guys, I think this one you know. In Malaysia, this is a very common example. This is probably something that you already know, you are aware of. Um, Air Asia, okay, they lease their planes, they don't buy their planes, okay. So normally assets that are leased are aircrafts, okay, planes, buildings, cars. Last time in the institution where I used to work, all the laptops that we were using were actually leased. Okay, we did not purchase it. I mean, our company did not purchase it for us. They were leased out to us. Okay, and if you are using it for a very long period, at the end of the let's say lease agreement, we actually have the ability to buy this asset over from the lessor. Okay, now, so why is it that normally people choose leases over buying? Okay, because you know that when you lease, you need to pay a certain amount of cash for a fixed period. Example, you need to pay $500. It's actually very little, maybe few $100,000 over a period of maybe 5 years. Let's say you want to use it for long term, you use it for 10 years. So then the question that comes to your mind is, isn't it better if we purchase the asset if you are going to lease for a very long period? All right. So why is it that instead of buying, some companies actually choose to lease their assets? All right. The reason why they do it is that because instead of using the large amount of money to purchase an asset, they will use that money for a more attractive investment that will generate a higher return. That's number one. Okay. As a result of that, even though you are a lessee, you also still have advantages, which are number one, you get tax saving on the lease payment. All right. Even though you are not the owner of the asset, you have a tax saving on the lease payment. So even though you pay leases, you are not the owner, you still manage to get a tax saving. The next one, if you are a company that is unable to obtain a loan, like what I told you just now, the reason why people choose to lease assets is because sometimes they don't have enough capital to buy it. So as a result of that, it is good for a lessee who does not have financial capacity, debt capacity, or financial capability, because even though they don't have enough money to borrow at the to borrow a large amount that you can use for your asset, you still may be able to have an asset to generate or to produce finished goods to be able to generate income for your company. Now, the next one, right? Sometimes when you have lease, even though it seems like a more beneficial option to purchase it outright, but sometimes it may be slightly cheaper, because if you have a bank loan, you must remember you have to pay monthly repayment and also interest on top of that. So the cost of interest plus your repayment might be much more expensive than taking out a lease, than using a lease agreement. So that's why some people choose to use lease agreements, right? And also, let's say if this asset is a specific asset relevant to rapidly growing and changing technology and environment, what you need to be aware is that for this particular period, you don't have to buy and own an asset in which after a few years it will become obsolete. So you will hold an asset where this asset will help you to generate cash flow for only the period that you require it, and subsequent to that you wouldn't need to have the asset, so you can take it on a short-term lease and you don't need to keep a redundant asset in your company. All right, so these are all the attractions of having leases in your organization. Now, guys, what are the types of leases that you have? So, in our syllabus, we have two different types of leases. Number one, you have an operating lease, and number two, you have a finance lease. So what is the difference between an operating lease and a finance lease? All right, so an operating lease is generally a short-term lease, okay, while a finance lease is a long-term lease. So what is the difference? What else is the difference? An operating lease, you will only hold or use the asset for a short period of time, where you will renew the asset after you use it. Okay, while a long-term lease, you as a lessee, you will take ownership of the asset and you will need to be responsible in maintaining the upkeep of the asset. So when you look here, I would have said the lessee is the person who is responsible for the maintenance, because you are now the owner of the asset. All right. Now, besides that, you also need to know that since you are now the acting owner, you are using the asset for a long period of time, what you need to understand is that all risk and rewards relevant to the asset will be transferred to you as a lessee. And since you are the lessee and all risk and rewards is transferred to you, you now have to be accountable for not only the maintenance, but any other long-term maintenance relevant to the asset. So normally, guys, when you talk about the finance lease, because finance lease is a long-term lease, it normally will cover two periods, which is number one. Hold on, my laptop is okay. Number one, you will have the primary period. This primary period will cover most of the asset's useful life. So UL is useful life. While the secondary period will cover the asset's life, or the lease of an asset will continue for the remaining life of the asset. That means, let's say the asset's life is about 20 years. So the primary period will cover at least 15 years, and the secondary period will continue it until the asset condemns and you cannot use it anymore. All right. Now, you also need to understand that normally when it comes to a finance lease, what happens is that at the end of the life of, or towards Maybe because you are using it for a long period. So at the end of the finance lease period, normally you as a lessee, you will be able to purchase the asset and become the owner of the asset. Now, for the second one, um, operating lease. So as I told you, operating lease is a short-term lease. And because it is a short-term lease, that means sometimes you only use it for a period of 1 year. And every year, if you want to reuse the asset, or you want to continue using the asset, you need to renew your agreement. So you can see here, lessor is responsible for maintaining the asset maintenance, and it is normally for a short time period, where the period of the lease is normally, because it's short term, right? So it's normally shorter than its useful life. Normally, guys, it's very short. That means it's lesser than 5 years, right? That's why you call it a short term lease. And what happens is, because this lease is a short term lease, at the end of the agreement, what happens is that the lessor will either rent the asset to another person who wants the asset, or you can renew. I forgot to add that here. You as a lessee, you can renew your agreement, or the lessor can sell it to someone else. It completely depends on the lessor. All right. Now, the next one is sale and leaseback. All right. So what is sale and leaseback? What is the concept of sale and leaseback? So the concept of sale and leaseback is that you are the owner of the asset. All right, you are the owner of the asset, and what happens is that because you want a large amount of capital available to you, immediately available, what you normally will do is you will sell your asset to the finance company, right? And subsequent to that, even though you are not the asset owner anymore, you will still take on this asset and you would continue to use it, but on a leasing agreement. So remember, you are initially the owner of the asset. After you are the owner, if you want capital, what you do is you sell the asset, and with the amount of funds and finances available, what you do is that you will use it for whatever reason that you wanted it in the first place, and subsequently you will continue to use the asset on a leasing agreement. So this is something that you need to be careful with. Sale and leaseback, you are no more the owner. So when you are not an owner anymore, what you need to do is, what you need to remember is, you don't get capital allowances anymore. All right. So guys, you must remember that normally you want to raise finance from the mortgage of the asset, right? But as a result of mortgaging your asset, right, or selling your asset, or not being an owner of the asset anymore, what is the impact? So normally there will be a lot of disadvantages, right? Disadvantages of sale and leaseback. What are the disadvantages? Number one, you used to be the owner of the asset, but now since you sold it to another person and you're just using it on a lease basis, you don't actually have ownership anymore. So you have lost ownership on an asset that for a significant period of time you were owning it. So it probably was an asset that was valuable to your organization. Okay, the next one, because you sold on mortgage, so it is similar to a loan. So what happens is that it will reduce the company's borrowing capacity in the future. Not only because of the mortgage or the selling of the asset, because sometimes If you take it on a mortgage, it may reduce your ability to borrow. But if you um, if you um, if you sold off the asset, what happens is that in future, when you want to borrow a loan, you may not have enough assets to back up your loan. So that is one major disadvantage. All right. Besides that, what happens is, because you are leasing the asset now, you have a binding agreement to use the asset for a significant period of time, but you are not the owner, so now you have to take care or watch it. um, the way you have to take care or you have to watch it, not like how it is yours, but it's another person's asset. All right. Now, you also need to remember that there may be additional cost to you, because as a result of taking on this sale and leaseback arrangement, maybe your rental cost may also be very high. Okay. So you need to ensure that you keep these costs under control. All right. Now, so these are the little knowledge that you can have on sale and leaseback arrangement. Okay, so as I just going to highlight a few things here. You sell the asset to another organization and lease it back from them. So sale, you sell it and you lease it back. So that's the name, sale and lease back. Now the next thing is, the moment you have a sale and leaseback arrangement, this is an opportunity for a company to obtain immediate finance. The reason why you have this arrangement is because you want finance immediately available without taking on a loan. So as a result of that, what happens is that you end up losing the ownership of the asset. So what do you need to do in a sale and leaseback arrangement or agreement? Right? In a sale and leaseback arrangement, you need to not sale and leaseback, buy or lease arrangement, okay? What you need to do is you need to compare. Is it better for my company to buy an asset outright, or is it better for me to lease the asset? Which one will cost lesser to me? So as you know, from what we have been discussing, this sale and buying and leasing arrangement is actually a form of a financing decision. So maybe you can write it somewhere around here. It is a financing decision. So because it is a financing decision, what you need to do is, okay, you will need to only use the financing cash flows. You do not use operating cash flow. So whatever operating cash flows that you have been using in your NPV will not apply in the lease or buy decision. You only will include the cost that is relevant to financing the asset. Example, initial cost, machine running cost, machine maintenance cost, scrap value, licensing fees. These are all costs arising as a result of using or buying or leasing this asset. Okay, the next one, once you use a financing cash flow, your discount factor is no more the WACC. Your discount factor is now going to change to become the after-tax cost of debt. Why? Because this is a financing decision, and to finance your debt, your loans, you will be financing it with interest. This interest is also called or regarded as your cost of debt, the cost of holding a debt. So what happens is that you will now need to use KD1 minus T as your discount factor. Okay, why you have to 1 minus t? The reason you use 1 minus t is because whenever there is an interest, you will have a tax saving. So the KD will always be reduced by the impact of debt, right? And finally, once you have calculated the NPV for leasing and the NPV for buying, then you choose which one the cost is the cheapest. Okay, so how to do this question, I will teach you in a bit. Okay, I don't want to talk too much, okay, because if I talk too much it might be a little bit confusing. So I will continue with putting up the formats and explaining it in more detail for you. All right, so maybe I will just draw the format down here. Okay, for the layout, guys, what we are going to do is, okay, what I want to do is I will show you how we do the layout. So normally I will have a buying decision. I will write my year, whatever cost that I have. Okay, if got tax, then I include tax, initial investment, scrap value, all right, tax saving on capital allowance, net cash flow, discount factor. Okay, this one will be at KD 1 minus T, PV, and NPV. Okay, so this is one of the area. Now, remember, for leasing, okay, guys, I'm just going to draw a line in the middle here. So, for leasing, you must remember, okay, you have lease payment. Right. Now, because you have lease payment, your lease payment is a negative, is an outflow. So, tax saving on lease payment will be at however many percentage. All right. And then if you have any other costs, which normally I don't see, but can possible as long as it's a financing cost. And then your net cash flow, discount factor, PV, and NPV. Your your discount factor still remains at KD 1 minus T. So guys, please be aware when you do this, okay, when you do this, what you need to do is you need to be aware of the timing of cash flow, because normally your examiner, what he will do is he will say lease payment is paid at the beginning of the year. When he say at the beginning of the year, means normally you pay in year 1, you will record it in your NPV format as year 0. Okay, why do I say this? Because students' misconception is that whenever he say beginning of the year, it means year 0. No, whenever he say beginning of the year, it means beginning of year 1. But because your NPV only shows end of the year cash flow, so everything will be in the end of the year, which is year 0. So because beginning of year 1 also equals to end of year 0. So these are the little things that I want you to be aware of, that I want you to be careful of, because these are the things where examiner normally will pay attention, and he will try to confuse you, okay, and convince you to use his method. All right, so now this is your lease or buy. Okay, now what I also need you to do is, okay, I want you to make a comparison. If you notice here, I have got initial investment and scrap value, But here, I do not have initial investment or scrap value. Why? Can anyone tell me why is it that I do not have initial investment or scrap value? Yes, okay. The reason is because in the buying decision, you are actually the owner of the asset, while in a leasing decision, you are not the owner of the asset. And because you are not the owner of the asset, you will not be able to, I repeat, you will not be able to claim, or you did not incur this cost to purchase the machine, hence you will not get the scrap value. All right, so just be aware of the little things your examiner does. All right, and sometimes he may include a fee, and the fee may be confusing, you know, those little things that he does just to annoy you and make you do the wrong answer. Okay, so now guys, I also want to remind you, I'm going to do a question together with you. The question that I'm doing is the December 2009 question. So just now you see I opened it, all right, in the beginning of the class, okay, December 2009, okay. I will do this question as SOPCO, okay, from your revision kit. I'm not sure which version of the revision kit that you're using. You may have one question called AGDCO, and another question that you can try will be Melanie Co. So Melanie is like the most recent question. Don't worry, these questions I will do it together with you during the tutorial session, okay, but let's focus on getting our understanding right by doing ASOPCO first. So guys, I just want to give you a very quick reminder. Whenever you are doing lease or buy, please remember that you are trying to ensure that you are choosing whether the company should buy the asset or whether the company should lease the asset. Right? Those are the two things that you want to consider. Now, so I'm going to move to December 2009. Guys, I have included this question as part of your compilation. So you can look at it from there, okay, in your past year compilation. So now for this question, ASOPCO. ASOPCO is a very interesting question. I love to do this question together with students. The reason is because this question is actually a difficult question. When I say a difficult question, that means as compared to what you guys have done before, or all the other lease or buy questions, this is actually one of the more difficult questions that you need to pay attention to. The others, Melanie and AGD, are actually quite simple and very straightforward questions. That you don't really need to think too much. You can use whatever information that we have learned in this SOPCO, and you can apply it to the other questions. Okay, there are a lot of questions, guys, that we can do together. I've not done it yet. Okay, you should really go ahead and try to approach your lecturer, okay, to ask them more questions once you have done a lot more questions. But I also want you to I also want to remind you that you must keep trying more and more questions. What we do together is not sufficient. You must do yourself more and more questions, then you can practice more, and then after that you will be able to achieve a learning curve or a saturated point where you now are at your steady state. You don't have to think too much before you perform a calculation or before you write an answer. Okay, this is just like a quick reminder before we start calculation. Okay, now so here based on financing cash flows only, calculate and determine whether ASOPCO should lease or buy the new technology. So guys, please remember, whenever you are doing lease or buy decision, it is always based on financing cash flows only, nothing else. Okay, there isn't any other things that is included in this financing, lease or buy decision. Now, the next thing I want to remind you whenever he say determine here, that means he's asking you to make a decision. Whenever he asks you to make the decision, he is giving you 1 mark. Right? Now, besides that, when he said whether you should lease or buy the new machine, what I want you to also remember is that whenever an examiner want to ask a lease or buy question, he will definitely write lease or buy in the requirement. Because guys, what is the common question that I get from students? The common question that I get from students is they like to ask me, Miss, how do I know or how do I differentiate between a lease or buy question and a normal NPV question? Because all of them has the buying machinery. Okay guys, how you determine it is you need to compare. Okay, the question number one, first of all, he definitely will write lease or buy. I never seen before he never write lease or buy. But assuming your examiner purposely want to test your knowledge and he didn't write lease or buy. So what you do is you go up here, definitely somewhere in the question, you will see something about a lease payment. A lease payment on machinery is completely different from a lease rental of an office or something like that. So please be aware, please be careful. Okay, normally you would definitely see lease or buy. Okay, now let's read the question together. I will read only the parts that are necessary. I will not read the whole question because it's just wasting time. You only need to know what is your direction, how you do it. Okay, now ASOC is considering an investment in new technology that will reduce operating costs. So you are trying to invest in a new technology. This technology will help to reduce operating costs through increasing energy efficient and decreasing pollution. So you get to reduce the cost of your company because you get to increase energy efficiency and also decrease pollution. The new technology will cost $1 million. So this is the initial investment or the cost of the technology that you are purchasing. Will have a 4-year life, at the end of which the scrap value is 10,000. So here you have a useful life of 4 years and the scrap value is 100,000. So this is information relevant to the machine. So this will be included in your buying decision. Okay, buying only. Now, a license fee of 104,000 is payable at the end of the first year. So guys, these are the kind of questions that you need to be careful of. Why? Because these kind of questions, he paid 104,000 at the end of the first year. That means in year 1, your cost is 104. Now, the license fee will increase by 4% each year in the subsequent year, meaning 104,000 every year after year 1 will increase by 4%. So guys, please remember to pay attention because here the 104,000 is actually, okay, the 104,000 is actually a year 1 cost. If he say in current price terms, then it is a year 0 cost. Then you have to start to inflate from year 1 onwards. But here, because he already gave you the year 1 cost, you only start to inflate from year 2 onwards. Now, the new technology will help to reduce operating costs. So, this portion actually relates to operating costs. So remember, our decision is only relevant to financing decision. So I don't want you to include any operating cost items in our calculation. Now, so this can be ignored. This will be used, if I'm not mistaken, in part B of the question where he asks you to calculate the NPV, all right? But this is not the lease or buy relevant information. Okay, now if ASOCO bought the new technology, it would finance the purchase through a 4-year loan, paying an interest at an annual before tax rate of 8.6% per year. Guys, remember I told you, whenever we are doing a financing decision, your discount factor will be KD 1 minus T. The one that he gave it to you here, KD equals to 8.6%. Okay, you need to calculate KD 1 minus T. Now, alternatively, ASOCO could lease the new technology. So guys, here he already gave you that the lease or buy. Okay, now the company would pay for annual lease rental of 380,000 per year, payable in advance at the start of each year. So guys, remember when he say payable in advance at the start of each year, that means instead of paying normally at the end of year 1, you will pay it at the beginning of year 1. So for recording purposes or presentation purposes, you will put this value in the year 0 column. Right now, the annual lease rental includes the cost of license fee. That means the license fee for leasing is already incorporated into the lease rental payments. Okay, now, next, if ASOCO buys the new technology, it can claim capital allowances on the investment on a 25% reducing balance basis. So here you have 25% reducing balance. The company pays taxation 1 year in arrears. So guys, this question might be a little bit tough because of this tax paid in arrears. The tax rate given to you is 30%. ASOCO has an after-tax weighted average cost of capital of 11%. Okay, now let's start to do the question. I'm going to move to Excel, guys, okay? And from there, I will guide you how to do this question together with me. So just give me a moment. There are a few things that I will need to explain further, okay? Okay. So guys, I think you can see that, this guy is a little bit laggy. Yeah, I haven't switched off my laptop in a few days now. Okay, I've always been putting it on hibernate. So remember, to increase the efficiency of your laptop, please switch it off. Okay. Now let's continue. Let's do ASOCO. Part A, lease or buy. Okay. When you talk about lease or buy, the first one I want to do, you can do either lease first, you can do buy first. It's completely up to you. I'm going to do the easier one a bit. Okay, so I'm going to do buy first. Okay. So buy.